As everybody knows or should know, everything we say and do here at High Percent Trading is for educational purposes only. Futures trading, Forex trading, any type of financial trading always involves the element of risk, and therefore you should only be trading with capital that is risk capital that you can afford to lose. Nothing we say or do here in these live presentations, in any of the webinars, in any of the media, materials, indicators, strategies, or anything else shown or provided should ever be construed as trading or investment advice, and as always, any and all trades that you do take are taken at your sole risk and discretion. Okay, so I think what we're going to cover here at the beginning, I'm going to split this up a little bit. As you know, a lot of you are new here. Some of you are on trial. Some of you are coming in looking before you do the trial. And we've been covering a lot of the Octopus this whole week, primarily focusing in on what we call the accelerator and brakes. And that's actually what we've been showing in the webinars, in the live markets analysis rooms. And so I'm going to take the first part of this webinar today, this first half hour, in trying to cover some of the other indicators that are in the package. Because what you're looking at when what we show that is you're only kind of really scratching the surface of what's in there. Now, I realize that some of you, you're not going to use all of these indicators. Some of you may not use any of them, but I want to show them out there because there's about 25 or 26 indicators in this whole package. Once we'll do that, we're not going to get through everything today. We'll spend, like I said, about a half an hour, and then I'm going to circle back, take all the questions that you have that we're not going to cover with these indicators. Like, for example, Jack has asked, what is the stop loss for each trade? So questions like that, we'll get into all that, okay? Let me spend a little time on this first, and then we'll go ahead and wrap that, because I want to make this as interactive as possible today, but I also want to show some things probably that we haven't shown in a long time. This will be recorded today too, okay? So I have a gold chart up here, first of all. I have several indicators I've put up. If you go through the list, one of them is the HP2 ABC indicator. The other one is another one is the HP2 auto fib clusters. The HP2 square, that's a squaring of price and time, the manual one, and the HP2 right edge. These are all the visual ones. So I'm going to start with the right edge first of all. If you go up to the tab, you can click on it. And the first thing is to show it. So if you click on show and apply, it's going to show the right edge just in its simplest form. And the thing that you'll notice is that it's color specific. In other words, when you're in an uptrend and the trend is determined by the dynamic trend, you're going to have green right edge boxes. And when you're in a downtrend, you're going to have red right edge boxes. So that's the first thing to look at. What is the right edge? The right edge, basically, it's an indicator that's doing really tens of thousands of calculations behind the scenes. It's basically looking at what the market has been doing, what the institutions have been doing, what the movement has been, and basically calculating and showing you the next probable areas for support, for bounces, and target areas once you're in the trade. And so let me explain what those are. The green that we're looking at, these are the projected bounce areas that it's looking at. One of the things that we have, and let me see if I can show this. If it says show the mid-band 4, let me click on this and we'll be able to see the mid-band. There's the mid-band, okay? This is one of the core principles here. This is the mid-band. This determines what our trend is. So basically what we're looking at here, one of the ways that we like to teach how this is traded, and actually the Octopus can be set to do this in one of the templates is in an uptrend. Once the bottom of this right edge box is at or below the midband and price comes to that, we're looking for a bounce, okay? So you can see it was here, you can see it was here, we came within one tick here, and then we came down to here. And then we're looking for a reversal bar once that happens. So as we came down, we came into it, got a reversal bar, tried to go a little bit lower, but notice it couldn't even get below the box. And then we popped up into these projected cyan boxes. Now these cyan boxes are projected scalp targets. Okay, so when we first came, we got to one target, hit a second one, and then went up and through it. And then we noticed we came back to the right edge box, got our bounce, came up through the target, and then reversed. Then we came back down again. This box qualifies because the low is at or below the midband, came within a tick, bounced, hit the target, came back down to the next box, and up. Okay? So that's simply the way this indicator works. Keep your questions coming in. Like I said, what we're going to do is we're going to spend about a half an hour here, and then I'm going to circle back and go into all your questions here. Okay, Stephen has asked clarify which templates are used for the accelerator and brakes. So we'll go through that. All right, so that's the right edge. I don't want to get into deeper things with it right now. I just wanted to do an overview, but there's other things that you can turn on and turn off in here. The only other thing that I like a lot is the alert dots. So if I apply that, you'll see sometimes you get these dots as we come down. Okay, these are pretty good as well. It's also based on some momentum, and I know there's traders that just trade these as well. Okay, but that's the right edge. I don't want to belabor that too much. So I'm going to turn it off. Again, if you just want to turn it off, hit apply, and it goes away. Okay. The next one that we'll look at quickly is the ABC indicator. That's this indicator right here, HP2 ABC. If I click on it and click show, okay, notice you get this indicator. Now, this works in real time, so as the markets are moving in real time, this is continuing to move with the markets. Basically, it's trying to project where the next wave is going to end. The yellow area is the standard wave. That's where most of them will end. The long aspect is the projected extended move. Okay, so this is the projected extended move. You can see this in real time working backwards or forwards if you want. It's set to work in real time forwards, but if I come down here to where it says this A3, and if I click on this, I can move it backwards. You see how it's moving backwards? So you see as we moved up off the ABC, this is A, B, C, it was telling us this is the projected area that we can expect this wave to end at, and in fact it did. Now, it's not a, let me put it this way, when there's the correlations are there, okay, these are real strong setups. When the correlation is here and you also have something else going, perhaps like an S2 setup, or you're getting into an important band, or you might be getting into a phantom area or mid-band, these correlations are really good. When the correlation is not there, then you just ignore it, okay? And what do I mean by that? Let me show. Right here, we didn't have any correlation. Based on what was going on, we were looking at a bigger move. We never got it. Okay, so that really didn't mean anything. Here, if you were looking, for example, this is nothing more than a shakeout. As we came down to the mid-band, I know there's a mid-band down here. We came down, this was your standard projection. So this would give you some help in this area. And again, you can show it or not show it. If you turn it off, you won't see it. If you turn it on, you will. And as I indicated, as we move forward in real time, this will also move forward with it. So So John asked, and again, since we're on this topic, I can answer the topic. Bear with me 1 second, please. All right. So questions from John. Are all these calculations done on my computer, or is the indicator a download? No, these are all residing on your computer, John. So there's no lag on this. You don't have to reach out and get a server anywhere. These are all done on your computer. That was your question. Question: how many ticks is each bar? We're talking about the HPT bars. Okay. Just briefly, when you're moving up, it's 1 tick. It only takes 1 tick to close this. So as we're moving up, it takes 1 tick. In order to come down, what's called a reversal, it has to close 3 ticks below the last close. So we closed up here. It has to close 3 ticks down. 1, 2, 3, and that's the bar. Okay, these bars are really good for trading. They're very accurate for entering trades, and they're also specifically designed so that you can back test with the strategies, the analyzers. You can do a ton of statistical work in here as well. Okay, so let me turn off the ABC. Like I said, we're going to spend a little time on this morning. We're not going to get through everything, obviously. All right, the next one that you've got is the auto fib clusters. Now what this is, it's going to automatically draw on your charts if you activate it. It's going to take a visual on your chart, whatever the lowest low is and the highest high on your chart. It's going to take those, and I'll activate this. So I'm going to go show. Okay. So notice it picked the low here, it picked the high here, and then automatically it's going to tell you where the major retracements are. All right, this was the major retracement. This was a 50% retracement right here, and this was the 618. Okay, so as you were coming down, you had a major retracement here, expecting the 50% and the 618. As your chart moves in real time, this will move with it. You can freeze it if you want. And again, I'm just going to give you an overview. You can freeze it by freezing the low, freezing the top, and it'll stay there. What's also important is this works on clusters. So what do I mean by that? Well, what we had is a swing here and here, and so you had a major fib level here at 50%. You had another one at 61%. But as all of you know, price is dynamic, and there are various cycles within the price. There's the longer term cycle and an intermediate term cycle and a minor trend cycle. So all of those cycles are taken into account by the clusters. If I click on cluster 1, for example, notice down in here, if I click it on, you'll see it. We were saying this is an important level, right? Because we have a cluster, and that cluster is coming from here. It's from here to here. You can't see it because it's hidden. How about a second cluster? All right, there's also a second cluster from here to here, so it's clustering down here. Is there a third? No. Okay, so we did have 2 clusters here and here. It's telling you that that should be a fairly important level because not only do you have the major one, but you've got 2 other minor clusters helping you. Okay, that's basically the auto fib clusters. There's other things that it can do, but again, just on an overview, you can take this and work with it. All right, so I'm going to turn this off and see if we can get some more help from anything else. All right, another really nice indicator that you have here is the squaring of price and time. Okay, squaring of price and time. That's this indicator, the HP2 Square Manual. If I click on Show and click on the pivot, okay, you notice that it activates. So if we were moving in real time, let's say we were down here and we were looking to try to buy a support area coming down, let's see if we get some help from this. Remember, we looked at what the fib levels were. We showed what the ABC indicator was, all right, but let's just see if we'll get any help on the squaring of price and time. You just grab it here, you just pull it to where you want to go and just release it, okay? Just release it. That's the first thing you need to do. The second thing you need to do is you need to make this conform to your chart, because not everybody's chart has the same vertical distance or the same horizontal distance. Okay, every chart is different. So you basically need to align this so you can get the proper squaring of price and time. And you do that as follows. Notice when you activate this, you have a strong ray color right here, and then you have this heavier brown one here. This needs to line up with this, and the way you do that is you can move over here on scaling. So I need to kick it left. Okay, that went a little bit too far. So I can't do much more with that, but if I go to my keyboard on my right arrow, my small arrows to the right, and move it, I'll get that squared up. Okay, so we get that squared up right here. And what we were looking at potentially is, as we moved up, it was indicating that when we come into this level, first of all, this should be an important level, expect to bounce. When we come into the next level, this is an important level again, expect it to come and bounce. And then you were getting some support from this squaring line right here. Okay, I realized the markets were kind of moving sideways here, but again, that's how you get help on this. So you had a fib cluster down here, you had some nice scoring of price and times coming together. That indicator helps. Obviously, when you're running these types of indicators, some of this takes a little manual work. It's not fully automatic. So we do realize you can only run this maybe on one or two markets, but some of you, that's all you follow. Okay, and you're right, John. What I'm showing right now is complicated stuff. Okay, you're more interested in easy stuff, right? Simpler stuff, and I'm going to get to that in about another 10 minutes. Okay, I'm going to turn back to uh, what a lot of you are probably here to see, and that's the Octopus using the brakes and accelerator. That's all pre-done, and all you got to do is turn it on and run with it, okay? But this is getting into more of the esoteric indicators, so maybe I shouldn't spend too much time on this. Everyone loves easy, right? Okay. Um, let me just show a couple more simple ones, and then we'll move off of this, because I think most of you want to see other things. All right, I've got a YM chart up here. Okay, one of the indicators that you have here on the YM chart is the quarterback indicator. All right, the quarterback is showing price and time with Gann and Elliott analysis, and basically on an overview, when we're in an uptrend, which this is from the midband, because the midband's green, most waves in an uptrend end in either a wave 5 or a wave 7. Okay, so we were in an uptrend, we came down, and this is all calculating in real time. It actually gave you the wave 5 target down here. We came down to the target, that was a 5, and we bounced back. It continued one more time. It had another target down here. This was the wave 7 target, right? All of these targets are done based on 180 days of calculations on every movement there is on this market. So it's looking at all of that, and it was projecting a down wave here at 7 with this target, and it came down and bounced. Okay, so that's the way this works. Again, you can turn it on, turn it off. This is actually part of the Octopus if you want to use it. Okay, so enough of this. Let's get to the easier things now. Okay, everybody wants to see easy, so let's go to the easy things. Okay, You've been hearing and watching probably this week or whatever, the ability to trade in real time using what we call the Octopus. And this what it does, it filters. It'll take up to 20 different indicators in here and filter them and give you one nice, clean trade signal. And that's what these arrows represent, trade signals. These trade signals then you can either manually trade or you can automatically trade them through the Octopus trader that's in here. So for example, as we were getting later down in the session, these were entries. It was a long entry here and then a second entry here. And we talk about the 2 arrow rule. And that's a 2 entry rule. You don't want to keep chasing the entries as we move up. Not that they don't work, a lot of them do work, but what you'll find is the best way to trade, you take trade number 1. If you want to add on another one, take number 2 in the same direction and then basically pass on 3 and 4. Okay. So your question was how can you typically, where do you put your stops? Let's talk about this first entry right here. Your first entry was right here. Typically, when I do it, I like to run about a 7 or 8 tick stop. I use 8, and it automatically will place that for you if you want. Once you enter the trade, it'll automatically enter the trade. It places your stop, which in this case would be 8 ticks, places your profit targets, and can do trail stops as well. When you have a trade like this and you come down on this re-entry, for example, once you enter, a good stop can be right underneath the swing, all right? Right underneath the swing. So if you're using it automatically, it might place your stop here at the beginning. You can always take it and move it up. But that's typically the way we like to do it. Don't like to use big stops because that's not what trading is about, right? You don't want to take big stops. You want to keep things small because not every trade works. So when on the trades that don't work, you take a small loss and then you get ready for the next one. Question from Raymond, what is the blue band? Are you talking about this blue mid band, Raymond? If I'm understanding your question, what is this blue band? Or were you talking on the quarterback earlier? I think you were talking on the quarterback earlier, right? Yeah, the blue band on the quarterback. Yeah, that was just a band that was indicating that's where a wave 5 was. It was set to show. You can set it to show waves 5, 7, 9, 11. That's all it was. It was just showing the area that the wave 5 was. So, John, on your question when you said you need something simpler, this is a much simpler looking approach for you, right? In other words, this type of clean approach, this is what you were getting at. This is what you want to see. And then Stephen, you asked, can you please clarify which templates are used for the accelerator and break phrases? Okay, so let's do that. Okay, let me circle over here. This is the Russell from today. Okay, and if some of you may have been in the room yesterday when we did the non-farm payroll. So I'm going to show that. Okay. So as some of you recall, if you were in there yesterday, I was running 2 versions of the Octopus indicator. Okay. The first version was this one, and this is the accelerator. Okay. This is what we want to run. I was showing this one for the first hour or first 45 minutes of the markets after we had the non-farm payroll. This is what's called Profitto. This is the accelerator. So when you load your Octopus on the chart, you just do load from file, and you come over here and you do your Profitto indicator. Profitto template. So you just do open. I need to select it. Profitto, open, apply, and that's it. And it's going to produce your signals. Now, let's follow again what we followed on yesterday after the non-farm payroll. What we said we wanted to do is we need to wait 2 minutes. That report was released at 5:30 Pacific. That's 8:30 Eastern. Okay, released 5:30 Pacific, 8:30 Eastern. We want to wait 2 minutes for the markets to settle down because they're untradeable for those first couple of minutes. As you know, the market's shotgun, they move fast. You really can't get anything done in there, so you need to wait for the markets to settle down. Once they do, then you're looking to trade. So starting at 6:32, and 6:32 is out here, your first trade entry was here. All right, it started to look promising, but it just didn't go anywhere. If you use the stop that I indicated, your stop was right under here. You got stopped out. You lost about 6 ticks. We came down, and then we got our good hard signal right here again. All right, our good trade right here. You're entering. Your stop can go under here. If you took this trade, this ran up about $600 here in the span of just a minute. Okay, the markets move quickly, but you can get this trade quickly and let it run. And then following the 2-arrow rule. Okay, that's 2 arrows. Arrow 1, once you're in a good trade, you can, if you want, go for the second trade. That's right here. This could be an add-on, or it could be just rolling your stop to under here. But in either event, this was entry 1. This is entry 2. Okay. After that, even though this may continue to work to the upside, we always talk about you really don't want to take any more trades. All right. Even though this trade you could have got a scalp, this trade you could have got a scalp, it just as easily could have collapsed down. So again, we like to get all the percentages, all the probabilities in favor of these trades, and that's why I like the 2-arrow rule. Question, does the arrow show up before the price turns or after? The arrow is going to show up when we get this confirmed price on the reversal bar. Okay. When we get the confirmed price on the reversal bar, that's when the arrow shows up, right here. Can you explain how you enter? Well, part and parcel of what's in here is called the Octopus trader. The indicator has a trader that you can actually trade with. And so it's over here. You need to select an ATM strategy. You build your own ATM strategies. And then if you want to enter, for example, you're looking to do a trade entry here, you can just activate the buy and or the sell because you don't know which way you might enter, okay? And you click one entry. Or if you want to do multiple entries where, in other words, where it takes the trade, once you're flat, it'll take a second trade if you want, you do that. But this is how you do it, and it will do it automatically. Once this arrow fires, it places and fills the order if you want to do that, and then it manages it. Okay? Stephen asks, what trail stops do you use for the runner contract, and are they the same across all markets? And that's really the beauty of this, Stephen, is you choose what you want. Okay? Everybody trades differently. Some people like to have tighter stops. Others like to have bigger trail stops. Some of you don't even use trail stops at all. You're only trading one market or two markets, and you're gonna manually adjust them. So that's really up to you. You can create any type of ATM strategy in NinjaTrader that you want. For example, what I'm showing on this computer, there's several ATM strategies here. I can just select any one of these, and whatever I select, once it executes the trade, it'll go with it. Are you familiar, Stephen, with working with the ATM strategies in NinjaTrader? And I'll wait for your question. So Pat, do you see, you're not hitting market order on this, right? You're basically, it's going to fire, it's going to take that trade once the arrow comes. There isn't anything more you need to do. You just preset this. You just preset it. So for example, let me show over here. As the market moved lower, okay, remember on the two arrow rule, arrow 1, arrow 2. All right, we're really done taking long trades. Now we're going to look for short trades. So you can just turn this off, right? And now all we're looking for is a sell arrow. And so you could be waiting here, waiting, and eventually you get your sell arrow and it fires the trade and it puts you in the trade. Okay. If you want to add on to the trade, and again, there's a whole video on this, so I don't want to go deep into this because there's a whole video on the website, and I'll show that. You can do add like that, and it would add a position here if you want. If you were flat, then it would enter the position again. If Sergey asked if you're using the auto, you mean this part, right, Sergey? How do you stop it from taking trades after the first two arrows? Right now, you'd have to turn it off, just like that. Okay. There has been a lot of discussion with members and actually with some of you on trial to see if it's possible to build that trade limitation in here. That's something that's on the table that we can talk about. Right now, that's not in here, but that is a good point and probably would be a good thing for this. But right now, all you simply have to do is just turn it off. So once you got in your second trade, you're in trade 1, you're in trade 2, just click on it and turn it off. Okay? Or if you know, since you're in trade 1 and trade 2, that your next trade that you want to take will be to the buy side, well, then you can just click buy on, turn this off, and you're good to go again. You can also do the reverse. All right? That's how you stop that. So what we also talked about here is, remember now, where are we at on the non-farm payroll? The first trade that was taken here and then the second trade, that put us basically about two minutes into the trade session. Again, you had the short trade here and the next short trade entry here, and this was a good runner. This market continued to come down. Notice there were multiple signals in here, all of these to the downside. Most of them worked, okay? But again, you never know when you're going to get a sequence like this, or where it's just going to go 2 or 3 and then turn the other way. That's why it's really important in your trading to try to trade in multiples of 2 or more, right? You hear us say that all the time. Try to trade in multiples of 2 or more. You want to get into the trade and then manage a runner and let that runner run as deep as you can go with it. Some of the really good traders that have a little bigger account can do 3, multiples of 3. That third one is what's called a pocket runner. What I mean by that is you basically, once you enter it, you can take your stop slightly above break even, and you just put it in your pocket and wait until it either comes back and hits that, or you get 80, 90, 100 ticks in it, and then you start looking to take it out. One way we talk about managing these is once you get in the trade and you come down in these plateau areas like this, right? Once you come down in the plateau area, once you close above it, you can get out. You wait for it to come up, you get a reversal bar, and you can put it back on again, all right? So you wait for it to come down into the plateau area again. Here is the plateau area. Wait for it to close, go out, and again, re-enter the trade. Down to the plateau area, wait for it to close, come up, get back in, and then your stop's right above here. So you're not giving up a whole bunch. That's a good way to trade. But if you have the pocket one that I indicated, number 3, you're not doing this. You're not waiting for it to come down, get out, come down, get out, come down. You're just putting it away and you're riding the big run down. And eventually when you get 70, 80, 90, 100 ticks, then you're looking to get out. It's very hard to do for most traders because most traders don't like to sit and watch these profits come back and away. But that's how you can make a large amount of money on a big run. Easy to say, difficult to do though. All right. So I answered one part of that on the 2 types of templates, right? We're running the accelerator and running the brakes. All right. And then you can see we're still within our, we basically got out here and we're done. Okay. It continued to make some good profits on entries, but all you needed was that first half hour, first 20 minutes. All right, let me show the next one then. And then what it is you can go to the brakes, right? So I need to turn something on and turn something off after that. Okay. So what are the brakes? The brakes are this octopus, right? And we actually did this in the, I think we did this in the room yesterday. All right, we just created one called brakes, but really what this is for you that have these templates, it's this template right here, the S2 Alt W2 template, S2 Alt W2 template. So you click open and you click apply, all right? And the only modification that we did to this is because traders only like to trade in the direction of the trend, and the trend is determined by this mid band. Okay, so only going short when we're in a downtrend, only going long when we're in an uptrend, is on the second octopus right here. We turned off the last 5. Okay, whatever was checked, we just turned them off. And then you hit apply. And then you can reload. I'll show it. I don't want to reload yet because I don't want this to fire. So I'm going to turn this off. And this is how easy it is. You can turn it on, turn it off. All right, now I'm going to go ahead and reload, and now you'll see the difference. Steve said, is that a trail stop you like to use, Steve? Is 50% profit? That's, you'll keep trailing, but once you give up 50%, you like to go out. I mean, that's one method to do it. Yep. And like I said, everybody has their own differences. We always recommend. We can recommend trail stops and things like that. We can recommend that, but it's really up to you. This is not a black box system in the standpoint that not everybody is using the same thing. Okay, because I don't have to tell you, if you've been around trading for any length of time, when everybody starts using the same thing with the same stops, the same profit targets, the same everything, and if you've got 100 traders doing that, trading crude oil or trading the NASDAQ or trading the Russell, it will start to affect it. The good thing about this is you can fine tune all of these to your stops, to your profit targets, to your entries, and you don't fall into that trap. Yes, Stephen, good question. Is there anywhere on your site that has a brief summary to explain the content and purpose of all the templates? Absolutely, and I'm going to show that. Okay, let me just show this. So this is now running the brakes. Okay, this is the one running the brakes right now. So basically now we're doing what? We're not looking for momentum runs anymore. Okay, basically we're like a half hour out now off the an hour out off the pit session. So now we're employing a different type of trade. All right, so nice long here and another long entry here. Okay, and then another one here. This was a home run. You can see it doesn't trade much. That's the nice thing. As the markets slow down, right, as we get through that first hour, the markets slow down. They start to trade differently. The institutions now have had time to analyze what's going on. They've had time to execute some of their orders, and the market gets a little more structure and stability into it. Okay, so because of that, you need to change the methodology of how you're trading. Now, we've applied this all this week the same way, right? We've used the accelerator uh, after the pit opens, after major reports, and then once we get past our prescribed time, we turn it off and we run the brakes. And we've done that consistently on all the markets this week. We haven't deviated from that. The only time that we have expanded the window is when we ran the accelerator, is when we had a major report, like a 7 a.m. Pacific major report. We took that window out 15 more minutes. In the case of non-farm payroll, you can take that out a whole hour, okay, because it tends to run more. But again, these were the trade setups then running the brakes. You know, a nice trade here, a good trade here. You had basically a home run trade here, and it continued to trade, right? Another one here. Every one of these are good trades. I think eventually it ended up not having one. But again, you know, we're in the trend. We're getting the trades. I think this might be, well, even here it's still taking them, okay? And we're not making this stuff up. I mean, you know, this is what it is. If you run this, you see it. These are excellent trade entries, all right? These trade entries are based on years and years of trading experience, analysis in markets, statistical research, working with probabilities. I mean, just so many factors that go into this. Very complex as far as what is going on, but very simple in its visual and the method that you trade. Okay, because I think who was that? Was Stefan? Was that you who said? Oh no, it was John. John said at the beginning when I was showing some of those esoteric indicators, he said, "Wow, this stuff is complicated. I need something simple." All right, this is simple from the standpoint is you put it on, it boils it down. There's no guesswork involved here, right? Question from Rob, only 2 errors in a row on breaks. Yeah, I mean that's what winning ones, okay? That's what we're talking about, winning trades in a row. Okay? So here's an example. Here's trade number 1, that's a winner. Okay? This could be trade number 2. This is a good scalp but no runner. Okay? So you can take number 3 here. This also qualifies for a different type of trade too, right, Rob? You know what this is down here, don't you? This is a phantom trade down here. A phantom trade with divergence. So when I'm talking about 2 trades, we're talking about in the same direction. And the second one is at a better price, at or near a better price than the first one, and it also results in a profit. You're talking about these down here, John? These indicators down here? And what is your question on that? The three graphs below, any value. Oh, are you saying, is there any value to them? Is that what you're saying? I think that's your question. And if that is, then my answer is yes. This indicator is looking at, among other things, this indicator and this indicator and this indicator and other indicators that are not even on the chart. So these are just here visually to kind of help. You don't even have to have these on the chart though. The good thing about this is it will analyze all of these indicators that it's using behind the scenes. They don't have to be on your chart at all. You'll still get the same results. So I could have nothing on here. I could have a blank chart and you'd still get the same things firing in real time. Okay, but a lot of traders like to have these visually that they can look at. Yes, Surjad, if I understand your question correctly, you're talking about the daily analysis sessions like we have in the live markets. Those right now, yeah, they're Monday, Tuesday, Wednesday, Thursday, and Friday. If you look up probably today or tomorrow, back to the website, you'll see the links for next week. Okay, you'll see the links for next week. But who asked me the question on the videos for the templates? Let me just scroll back here for a second. Stephen, is there anywhere on your site that has a brief summary to explain the content and purpose of all that? Let me show that. Okay, so hang on a second. I'm going to go, if you pull up the website, okay, you pull up the website. These were all the links for this week. Okay, you could see Monday, Tuesday, Wednesday, Thursday, Friday. These were all the links here. Here were the tutorial webinars, the workshop webinars. We had one on Tuesday, Thursday at a later time. This, of course, is our link for today, right here. And then, like I said, either tomorrow or on Sunday, all the new ones will be up for next week. But right here, where it says high percent YouTube channel, if you click on this, we'll wait for it to come up. You can see there's a playlist here. It's called the Octopus Templates Videos. Okay, so this is in direct answer to the question. And there's 5 videos here. Okay, and these 5 videos go through every single template that's there. And it talks about how they're different from each other. So for example, the first one is all of the templates that deal with retrace trades are here. The next one is all of the templates that deal with what's called the first series are here. All of the templates for the Profitto are here. Okay, the Profitto, one of those was the accelerator. Okay, then another video, all of the templates dealing with the S2. The S2, one of them was the breaks that we covered. And then the last one, which just came up a couple of days ago, deals with the algo bands, which represents what the institutions are doing when their algorithms kick in. The quarterback, which I showed a brief indicator of this morning, and it finishes with what we actually started with, which is the default template, which is the standard template. That was the very first Octopus template that came out, but they're all in here, and I urge all of you to do that. Let me show one other thing here that everybody should do in addition to seeing these. Okay, and by the way, there's about 160 videos up here on YouTube for high percent trading. We're in the process of categorizing those, simplifying them. We're going to drop a lot out because we want to basically give you playlists that you can come in. If you want to have playlists to see how statistical analyzers work, we'll have that. Playlists on how the indicators work, we'll have those. But right now, you can subscribe. If you go to Hypercent Trading on YouTube, just subscribe. You don't. Subscription means you just want to be notified when a new video gets posted. Like today, for example, this one's going to be recorded, and then it'll be placed up there. And if you subscribe to this, you will see that, okay? But what I was getting to is as follows. I'm going to go back to the web page. If you go to the free trial download section, all right, I'm going to click on that, free trial download. And this is helpful because I'm glad, Steven, I'm glad you asked that question, okay, because that was really helpful. Just wait for this to stop spinning here. Well, I can't get this to move. Hang on. I've got so much stuff open right now. What I'm trying to get to is there are videos here that are really important to watch in addition to the ones that you talked about. I may have to just open it up again. Let me close it. Let me try it again. You want to move the session up, Pat? Is that what you're talking about? Yeah, that's fine. We can bump it a half an hour. We can do that. Let me just get this to come up here so I can show this. If we can't, then we're going to move on to something else. I didn't get to reboot my computer last night. Here we go. All right, so when you go to the users download section, you'll notice, and by the way, you don't want to download your trial from here. Everybody's getting instructions to download from the members section, okay? But this is a short video that shows how to import and download the files. That's really important, okay? And then if you scroll down, you'll see you're going to get an overview on the Octopus. This will give you some newly released functions. And then you have some training videos here, 1, 2, and 3. These get more into the nitty-gritty of things. This talks about the Octopus trader. Remember I was showing you how the Octopus can automatically take trades, manage them. This shows how to do all of that. All right. Then we have another one that we're not going to cover today. It's called a mini trader. The mini trader is like the Octopus trader, but it's on steroids. You can do a lot more with it, okay? So watch those videos. And then it talks about some other trade setups here as well. But between these videos and the 5 that I showed you over on YouTube, you'll have a pretty good grounding in here of what it does, okay? Bottom line is, as I indicated, the indicators are very complex. The calculations that it's doing are very complex, and it's looking at a multitude of things, but it's boiling them down to one simple trade entry that you act on. Okay? One simple trade. And again, if you follow these principles every day, accelerator, brakes, You should be profitable 22 out of 23 trading days. The markets repeat over and over and over again. Some days are easier than others. Some days you'll get in there like this, on Friday in the first 20 minutes, and it's gangbusters, and you're done. Other days, you're going to start out, you might have a losing trade, you might have a second losing trade, and you're going to go back and forth, but eventually it breaks out and goes. If you stay disciplined, you hear us always say trading is about what? Patience, discipline, and timing. You have to have all of those, and then you have to have the dogged perseverance. Dogged perseverance is this entry right here, okay? Notice you got the entry, you got a nice profit. You came down, took another one, you got a nice scalp, but you're trying to get your runner. Everything is still good here. And then a good trade. Let me clarify. I know what your question was. Who was that? Rob. Let me clarify. Remember you asked the question of the only 2 arrows in a row on the accelerator. What about the brakes? What I didn't mention is this. This was your trade entry here, right? This trade went up. Now, do you see how we ratcheted higher? In other words, everything moved higher. The mid-band moved higher. This is called a ratchet reset. Oh, sorry, I'm frozen. Now you can see it, right? See where the trade entry was right here? This trade went higher. This mid-band ratcheted higher. That resets everything. That resets it again. All right? So you can take your trade again here, and then take it here, and then this is the dogged perseverance that I mentioned, okay? We're still in a good trade here. This is a phantom trade down here. If we had broken below here, we would have gotten a trend change. This is still a good trade here. All right, so that's the reset rule. The reset rule applies for the brakes. It does not apply for the accelerator. The accelerator remembers momentum. So you could get this ratcheting up and up and up. Follow the 2 arrow rule. Once you reset, you can reset your brakes again too. Stephen, you'd have to contact me on that. I don't know if I talked to you about that, but we do have some, yes. But they're not all caught up on that. Okay, because a lot of this was newly released on the S2s and the waves. So that's behind the curve a little bit. Yes, Jep, can you send me did you send me your machine ID? Send me your machine ID on that, okay? I want to make sure you get everything installed. All right. If there's no further questions, let's go ahead and wrap this up. I want to thank everybody for coming. Oh, you came in that way? Okay. Then he'll help you with that. He'll help you. Ted, I'm not sure what that is. One thing we didn't cover today that a lot of our users are using is we have what's called the DT zones, which is it's a very smart market profile. Okay, but I think your question is something different. If you send me an email on that, Ted, and some information, and I can get back to you on that question because I'm not sure exactly what it is you're looking at there, okay? Yes, Rick, question is that he just came in late. Is it being recorded? Yes. Send me an email and some examples of that. Yeah, and I can respond. All right, everybody, that's going to do it. Thanks for coming. This will be up here in a couple hours again, and hope to see you all next week, all right? You're welcome. Bye now.